Stocks failed to hold their ground after a steady opening. IT and financials drag while FMCG and industrials stay resilient.
SEBI allows the government stake in IDBI Bank to be classified as public holdings provided its post-divestment stake is not greater than 15% and it does not exercise any control. The move removes a key hurdle for bidders.
Soban Macrotech developers report what is a strong trend in home bookings and collections in the third quarter. The commentary also exudes optimism.
Select midcap swing to news. Mukang gains after closing a big land sale deal. Force Motors rides up on strong sales in December. And Pokarna jumps after it is cleared of dumping products in the US.
Metals gain after China unveils plans for big project spending. Low inventories provide a further fillip to aluminium.
Hello and welcome. Good afternoon. You're watching us here on Halftime Report. I'm Bangla Malu. With me, Sonal Budra and Ekta Batra. As always, it is a weak session, the third week session that we're seeing for our markets. The Nifty's given up on that 18,000 mark. It did so yesterday and now as well. It's holding around that 17,900. It's off the lows of today's trading session. We'll talk a little more about that in detail in just a bit. But what's not doing well for the markets is the Nifty Bank. For the third straight session, in fact, in last three trading sessions, we've seen the Nifty Bank fall over 1,200, closer to 1,300 points itself. The mid-cap index too, in line with the frontline indices, lower today. We have 1,500 stocks which are declining. So there is pressure all over, right?
Hi Sonal, hi Manglam. Yes, absolutely. It is definitely a sluggish day. It has been a sluggish start, you'd have to say, for 2023. Not to mention that we have a lot of the macro data which is now picking up. We did have the Fed minutes to reckon with just a couple of days ago, but now we do have the US jobs data which will be released this Friday evening. So that is something that the markets will be keenly awaiting to assess what the Fed's thinking going forward into 2023. A lot of stocks buzzing from the real estate space, from the financial space. So we have a lot to discuss over the next 60 odd minutes. Just keep your eye out on a couple of these stocks which are sitting at fresh 52-week highs, such as Abbott as well as Apollo Tyres. Apollo Tyres because rubber prices have also softened. So those stocks continue to see momentum in what is a weak market. Hi, Sonal.
Hey, Ekta. Hey, Manglam. Yes, that's right. So it's a very stock-specific market today. And if we look at copper, we've been talking about how crude prices have been coming down. So ONGC, that is a stock which is at the highs of the day. And that is something we'll be watching out for. And apart from that, Indian Oil Corporation, that is the other one which benefits from the decline in oil prices that we see. So it's a tale of two cities. While IOC is the one which benefits, it is higher. ONGC usually is on the negative side. But yesterday, it is gaining some momentum. But in the broader markets, the stock which is not doing so well is Trent. It is under pressure after Kotak has initiated coverage on the stock. It is with a reduced call. Manglam, what is the note saying?
Well, the note says, the fact that they like the business. Trent, as we all know, has been a big wealth creator in the past. Also, is the retail arm of the Tata Group. We do have brands like Westside, Zudio, and the joint venture that they have with Zara as well. The stock is currently, however, at the low point of trade, despite Kotak liking the prospects of the business is because of rich valuations. They say they like the business and the opportunity in India, but valuations extremely rich. In fact, their model projects a revenue compounding of 28% over the next couple of years, and as a result of which the net profit would also grow about 32%. However, if you put those numbers as well, Kotak says that the stock is trading at 60 times December 2024 price to earnings, which is extremely expensive. And given their valuation metrics, they've reached a fair value of close to around 1,320 odd rupees, which after the decline on the stock today is about an 80 rupee up move from here. But they don't believe that, it's enough for an 80 rupee up move, and which is why they have a reduced rating on the stock as they've initiated coverage. But we do have the management of specialty restaurants with us. The stock has been buzzing over the last couple of days. It's seen a big move. In fact, yesterday, towards close, we saw an up move in double digits, and today as well. Add to that, it's a 4% up move. So in the last 2 days, it's been a 15% up move. The stock, in fact, in the last 12 months itself, has seen a 180% up move. A beneficiary of the opening up trend, a beneficiary of the company turning around the corner with regards to its operational performance, and more importantly, they've also raised funds to fund or fuel growth. We have with us Sanjan Chatterjee, who's the chairman and MD of the company joining in. Thanks a lot, Mr. Chatterjee, for joining in, and wish you a very happy new year. Speaking about the new year itself, could you tell us how December was for you, New Year's Eve? How the third quarter, as a result, was for you? I mean, if you could give us some details as to how much better it was versus pre-pandemic, how much better it was versus the festive season quarter.
Pre-pandemic versus now. In fact, in terms of bottom lines, obviously things have completely changed. Over a period of a few quarters, you've seen that because we shut our non-profitable restaurants, then put in a hybrid model of cloud versus our own standalone restaurants. So that's been going on, and we put in an embargo at that point of time for any expansion. So I think there's definitely a growth, not just in terms of turnover or the top line. The growth is concentrated and work towards a profitability.
To quantify,
patches and,
Would you be able to quantify the kind of growth that you saw on the top line in the third quarter? I mean, not asking for exact numbers, but just if you could directionally give us a sense whether it was mid-teens, it was upwards of 20%, 50%. I mean, the numbers that you saw?
Very difficult to make that statement. As you know, I'm bound by governance. But I can say this to you that historically this quarter has been a good quarter. And this is Durga Puja, Diwali, and then the New Year which come in. So we've seen a respectable growth as it happens on a regular basis. In this case, it's been a little more. I would rather say that because of the fact that I think that the revenge eating, which has been the most abused term, has been continuing to be there. And we see that there is a robust growth on the dine-in as well as the delivery. The interesting part is that delivery, we thought that will, come down to a level which would not be quantifiable enough. But fortunately, we being a dine-in restaurants, we see a different kind of a growth. So 25 to 27% continues to come in from delivery, where you have less of input cost and the clouds which have come in. So I think that the whole, business matrix have completely changed both ways, because even if people are like World Cup, there was a huge spurge in the delivery. So fair enough, you can't come to the restaurant, but there's a, compensation which is coming in. So this is a kind of a new model. So I've been, quoted saying that it's a kind of a rebirth or a punarjan. So that is where we are.
Okay, Mr. Chatterjee, that's a very interesting term, revenge eating. I don't know how that bodes well. I'm sure it bodes well for a lot of the pharmaceutical companies that I track. But Mr. Chatterjee, you've shut your non-profitable businesses. You're bullish about cloud dining or your cloud kitchen, considering that you haven't seen any sort of, come off in terms of the delivery volumes. So based on what you are seeing in terms of trends of 2023, what can you guide us in terms of profitability? You've done, 26 odd crores in the first half in terms of profit. How much do you think you can probably improve it to and sustain it at?
See, again, forward-looking numbers I'm not supposed to talk about, but this
give us a broad guidance.
Yeah. So the guidance would be that it will continue, if not more, and obviously as we go into this season. And the next season, we are learning a little more about things. There are new restaurants which are coming up. There's been a tremendous growth in terms of the inputs which have been put in the same store growths. So I think that there's a different, equation by the hour which is changing. Mainland China's have gone through a kind of a new avatar of mainland China coming in. More of these, because we'd stopped any renovation, any kind of upgradation during the period of pandemic. We held it back. So all these have started coming in now. So we will see the dine-in footfalls coming up, because the fact that there was a little bit of fatigue in the interiors that we had earlier. So we will see things bettering over a period of time. Plus, as you know, we've been debt-free throughout, which has been my personal principle. And now that we have a bit of a funding now, the embargo is lifted, and our board has already said that 12 to 18 restaurants coming in next 24 months, inshallah, for which everything was planned. Real estate is almost, signed up. So all this was done pre-pandemic. So you will be seeing a surge in terms of top line, but profitable growth.
So, Mr. Chatterjee, those couple of things that I would like to take forward. You're talking about fundraising. Is the first tranche of the fund that you spoke about fundraising in December, have you received that? And when you talk about expansions, what kind of store addition or restaurant addition you will see in calendar year 23 and 24 as well? And what would the collective revenue look like after that?
See, certain things we have planned, which is in the number of restaurants, 12 to 15. And these are the brick and mortar restaurants. Additional would be the cloud kitchens. Now, cloud kitchens have a low input cost. So all this combined, you will see around 24 of these combination coming in, which is primarily in the Asian cuisine. As you know that mainland China Asia kitchen, and then Hakka, we are by and large dominating this area. And we see a surge in even a cloud model called Hakka by the day, by the hour. It's only cloud. So we see a lot of potential to dominate this area, which we have done over a period of time. So this growth will go on. There could be, the malls will have Asia kitchens, more and more malls. For example, in Bombay, we have Borivali, which is an Oberoi mall coming in. We've signed up. That will take another 6-8 months. So depending on the real estate supply, we would be able to complete the number of restaurants which I have spoke to you. And then the idea would be definitely to add to each quarter, as and when the restaurants come in, a top line which will be at least 25 to 30% bare minimum. I always talk about modest things happening, and at the end of the year it will cumulatively become bigger, and it will show a better top line, which is not necessarily my interest. Now it's all about, we're talking about a profitable growth. So that balancing will be seen.
Mr. Chatterjee, just finally, before we let you go, you spoke about expansion. You currently have, other brands as well. So are you looking to expand them too, which is the non-Asian brands? And secondly, when it comes to opening, 13 to 15 restaurants and the remaining cloud kitchens, is it going to be in existing cities where you increase your penetration, or is it going to be in newer cities where you, tap newer markets?
We still have huge potential in a city like Delhi. We're not penetrated well. We're not penetrated well in Hyderabad, not in Chennai, and also Bangalore. We could do 2 more because we shut many of them. There's demand there. Plus, tier 2 cities, which is in the form of Chandigarh, Guwahati, and Indore. So I think that there's huge potential there, and we've been getting a lot of feelers from the real estate research, and there'll be a combination, primarily metro, and then with a combination of these mini metros, tier 2 cities.
Okay, Mr. Chatterjee, we're going to let you go on that note. Thanks very much for joining in and talking to us. Well, we'll touch base and discuss all of your plans on the
people in Guwahati and Chandigarh, the places that he spoke about, will respond to a mainland China or a Chinese
I'm sure they'll take it with both hands.
Because in Chandigarh, they have a strong Sino-Ludhianvi cuisine, which is their own momos, etc. So in that, geography, how does, Asia Street Kitchen or any of these Pan-Asian names pan out is something that we'll watch out for how it is received.
Well, I'm sure it's going to be received with both hands because we have different cuisines across the whole of India, and we tend to, adapt it to anything or adopt anything that is given to us. But Mr. Chatterjee, we'll touch base and find out about how your expansion plans. And
yeah, you wanted to say, sir?
No, I was saying that we already have a restaurant in Chandigarh, mainland China, rocking over a period of 10 years. We're doing an Asia kitchen in a mall now. So you must be, you should go to Chandigarh and Guwahati and see what's happening now.
So next trip for Manglam is happening to Chandigarh and Guwahati for sure, to check that out.
I have no doubt in my mind. But Mr. Chatterjee, before we let you go, which was probably the most popular dish, this festive season, New Year's and that entire week?
All the dim sum. You name the dim sum, which we've been, experimenting with. We've got a dim sum chef from Shanghai. So people seem to be looking at, Asian is a very healthy food, as you know, compared to Indian. So we are safe, we are healthy, and we have a long-term surviving.
Okay, well, it depends on how much soya sauce you use in the Chinese food. But Mr. Chatterjee, that's a debate for another time. Thank you. Thank you very much for joining in and talking to us. So that's specialty restaurants. Need to take a short break, but up next, we'll get back to business. IDBI Bank, Sobha, Macrotech, all of them are reacting to news updates. Stay tuned. Welcome back. There is a lot of stocks which are in news, so let's get talking about them. IDBI Bank is in focus. It is surging after the market regulator SEBI agreed to classify the government's post-stake sale holding as public shareholding. Abhishek is here to tell us more details with regards to this. Abhishek, tell us.
Well, Ekta, as you mentioned, bank will write to exchanges to classify government holding as public holding after the divestment takes place. So the new acquirer of the bank will meet the public shareholding norm of minimum 25% post the transaction. So post divestment, Government of India will not exercise over the affairs of IDBI Bank. They will not have any special rights with respect to the bank, and they will not have any representative on the board of the bank or as key managerial person in the bank. So voting rights of Government of India will be capped at not more than 15% of the total voting rights, and reclassification as public with respect to open offer being made by the new acquirer. This is the update on IDBI Bank. Back to you.
Okay, all right. So that's the IDBI Bank stock in focus as well. But a couple of other stocks from the Realty pack which are buzzing around in trade. That is because of their Q3 operational update. We have Sobha, which is in focus because it has achieved the highest ever quarterly sales value and volumes as well. It's a growth with the company both on a quarter-on-quarter and on a YY basis. The sales value has gone up by 15%. The value as well is higher for the company. So volumes up by 12% at 1.47 million square feet. We also have the price realization, which has gone up substantially, a 22% increase on a sequential basis. There is an increase of 11% on a YY basis, and across the board we saw big gains coming in. While Bengaluru continues to remain the big geography for the company, this time around there was a fall, but it's the NCR region which saw a massive increase this time. Kerala was flat, but there was some growth in the gift city as well, and Tamil Nadu also did well today. Company says projects from other cities have contributed to 40% of the total sales volumes. This is other than Bengaluru. Gurgaon has achieved its highest ever quarterly sale this time around, and also that cash flows were very strong during the quarter, and it has led to a net debt reduction. It's the 8th quarter of net debt reduction that the company has seen. Macrotech as well, strong set of numbers this time around. The sales have increased on a YY basis, slight decline on a quarter-on-quarter basis. Collections are higher as well, and net debt for the company has reduced as well. So we'll watch out for their 6,000 crore rupees of net debt guidance for FY23 as well. 9 months as well, very strong. Pre-sales are up 62%, collections are up 33%. Pre-sales in 9 months is more than FY22, and they say that they will be able to actually exceed that 11,500 crore rupee in terms of guidance. Collections too strong in the 9-month period as well. They added 4 new projects, 5 million square feet of saleable area with a gross development value of around 8,500 crore rupees. Also, they have already surpassed their guidance of gross development area addition of 15,000 crore rupees, because right now it stands at 17,800 crore rupees. The stock is lower in trade, but yes, the update from the company is really strong this time.
All right, thanks a lot for that. That's about the realty space. Let's talk about an insight edge coming in. This is on Mukan. It is basically doing well after it's completed sale of its land in Thane. 800 crore rupees is what the company received. Let's talk about Nigel, who's tracking Mukan right now. Nigel, we spoke with the management as well.
Well, that's right, Manglam. This land sale in the Thane district was announced in 2021. In 2022, they went ahead and they received part of this amount. So the total consideration was around 800 crores. 20% was received in March 2022. So the remainder, that's 640 crores, well, that comes into their books. We spoke to the management earlier today, and obviously when they're getting money from a non-core asset, it will be used to reduce debt. And they've gone ahead and they've quantified that. So the debt number will come down to around 1,400 crores odd. As of the last disclosed number, it was in that vicinity of around 2,100 crores odd. So it's going to come down to around 1,400 crores. This is long-term and working capital put it together. And also they said that in terms of interest cost, per quarter they are spending close to around 45 crores. Now on a yearly basis, they'll save close to around 80 crores, which is good news. Besides that, they'll also give us an update on their operational performance. They're saying that they're doing close to around 1,500 crores per quarter, which is visible. They'll end the year with close to around 6,000 crores, which is very, very gettable. And margins, which had plunged in the last quarter, it's likely to improve from here on. Not just that, if demand is good, then maybe they could increase their sales by close to around 1,000 crores at minimal capex. So all eyes on that, whether in the next couple of years, it could grow from here on as well. In fact, on that note, let's hear out what the management, Mr. Bajaj, who's the new promoter of the company, had to tell us earlier today.
Big issue in Mukund was the high debt. So this will reduce our debt by about 800 crores. So we were, if you look at 2 years back, our total debt was about, the short-term, long-term all combined was about 3,500 crores. Now, actually, it comes down to about, after this 800 crores has come in yesterday, it comes down to about 1,000 crores. We hope to cross a top line of 6,000 crores. And we are absolutely on track to do that. Obviously, if debt comes down by 800 crores and the marginal cost of, say, interest rate is about 10%, we straight away save 80 crores, which goes to the bottom line. Margins, we are finding improvement quarter by quarter.
Okay, so that is Mukund. That stock is up around 3 to 4 odd % at this point in time. Market cap of just under around 2,000 odd crores. Before we take a short break, just wanted to point out 2 stocks, Alembic as well as Zydus Life. Both of them are in focus on account of launches as well as approvals in the US. Alembic has launched the generic version of a drug, Tovia's generic, and it is used to treat an overactive bladder. Market size is $177 million, so positive news there. And Zydus Life has launched a drug which is used to treat epilepsy in the US. Market size is quite significant, $488 million, so do watch out for that one as well. Need to take a short break, but technicals on the other side. Stay tuned.
Welcome back to Nifty, back again closer to the lower end of today's trading range. So let's get in a view coming in from the F&O pack. I mean, what exactly is taking place at midday? It's extremely interesting what's taking place in the F&O pack. The first thing that is happening is that if you just take a look at Nifty's today's low on the Nifty is 17,903 and the 100-day moving average is 17,902. Yesterday as well, we bounced back from the 100-day moving average, which was just below that 17,900 mark, about 10 points away from there. So the 100-day moving average is acting as an important support for the Nifty. But on the other hand, its big driver, which is the Nifty Bank, is finding resistance at the 50-day moving average, because the today high on Nifty Bank is 42,686, whereas the 50-day moving average is 42,658. The Nifty Bank right now is 42,235. So what is acting as a support for the Nifty Bank is the 100-day moving average. What's acting as a resistance, what is acting as a support for the Nifty is the 100-day moving average. What's acting as a resistance for the Nifty Bank is the 50-day moving average. And in that tug of war, we have the bulls and the bears placed. Bulls, however, believe that maybe, around that 17,800 to 17,900, we could see some support, but bears are clawing in. 18,000 call continues to see a fair amount of writing. 18,000 call has a premium of close to around 80 odd rupees, has added almost a crore shares in open interest, so levels upwards of 18,000 likely to face stiff resistance. Remember, the resistance earlier was 18,250 to 18,300. Now that's come lower, so bears have gained some territory. The 18,000 put writers, however, haven't entirely given up. We do have around 35 lakh shares still added in open interest for a premium of 150 odd rupees, telling you that roughly 17,850 would be an important support, 17,850 to 17,900. That's what we've seen at the 17,900 put as well. But put these questions forth to Prakash. Prakash, do you think we will see some support at 17,850 to 17,900, or are we likely to go further lower?
Well, good afternoon to you. So far, structure is weak. Technically, it's a weakness is there, is apparent. If it has to bounce, then I need a certain setup. In the time frame that we are watching, there's a very good chance we could see a bounce maybe today evening or maybe on Monday. Who knows? The recent low that we have seen on Nifty is around 17,800. The move from 17,800 to 18,300. The up move that we saw is a reactive up move, which basically means It has gone up, but gone up to come down. So far, we will see a move down. Now, when I look at the Bank Nifty, exactly similar structure. Structure is weak in the upper regions. What we are seeing down is normal. It's supposed to come down. But when I look at Nifty and Bank Nifty both together, Bank Nifty looks to be slightly more better than Nifty. Now, in the time frame that we are watching and the indicator that we use, there's a very good chance that we will see and hit a 17,800 and even breach that. If that happens, it's good. Because if that happens, Bank Nifty also will come down. But Bank Nifty is not likely to come down. The low that we have seen in Bank Nifty is 41,600. I don't think it's going to come down there. So there will be a diversion between Nifty and Bank Nifty. Nifty saw a new low, Bank Nifty did not. That becomes a base for a spring bounce back that we could see. So that may happen today evening, who knows? Or maybe on Monday, early morning, who knows? But looks like the place is right, but we will not buy unless we see strength. So far, what I see is weakness. Or I need to see a weakness in the weakness, which is still not apparent. So far, both looks weak to me. I'm waiting for a bounce back, but those signals are not there.
So waiting for a bounce back in a scenario like this, while we are seeing Nifty Bank at the lows of the day as well. Prakash, what would your individual technical bets be?
I will short Infosys. That looks weak to me. Infosys trading at 1456. The way it's trading looks like it can see lower levels. It's seeing even 1400 is possible in Infosys. So I would have stopped about 1465 or so and trade short Infosys. Stock that looks okay to me. I think I would say that Astral looks okay to me. Very good chance we could see Astral going up here from here. And it's already up around 2.5%. 2040 is a strong support zone. Dips until 2040 viable for a next technical target of 2120 in the days to come, Astral.
Okay. All right, Prakash, we're going to leave it on that note. Always a pleasure hearing your views. Thanks very much for joining in and speaking with us. So that is Prakash Gabha talking about the technicals. For the markets, well, yes, there's definitely pressure in the financials today. So the Bank Nifty is underperforming, down around 0.8%. But a couple of stocks which are managing to hold their head above the water include something like a Bandhan Bank, which is up around 2%, CEAT, which is managing to go from strength to strength. So that stock is up around 5% on a week-to-date basis already. So there is some amount of gains coming in there. Just watch out for a couple of stocks such as the likes of Jubilant Pharmova as well, which is seeing some amount of traction, not that much in terms of volumes, but nonetheless, a little bit of price action on that one. Take a short break. But up next, we have a special conversation lined up. Mayank Shah of Parley Products will join in for an outlook on demand trends in the FMCG space. Stay tuned.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. As promised, to discuss the demand trends in the industry and what's happening as far as the rural-urban split is concerned, we have with us Mayank Shah, who's the Senior Category Head at Parley Products, joining us now. Mayank, good afternoon. Thank you so much for joining us. Well, that's what we've been discussing for a long time, how rural recovery has really not taken place. Can you tell us what are the trends looking like right now in both the categories, entry-level and premium products as well, in both the urban and rural markets? Where is the demand coming from, and where is the weakness really being seen?
So, if we talk about FMCG as a whole category, I think urban demand has been pretty resilient, and we've seen, good demand coming in from urban India since last almost more than 12 months. Sorry. However, if we talk about rural, I think there was a little bit of slowdown, especially in discretionary category. Essentials, I think there was tapering of growth, but discretionary category was something that was, getting affected. And we saw that, in last year. However, if we talk about the recent trend in last about, 1.5, 2 months, we've seen a recovery in rural demand. And the reasons behind them, if we talk about the reasons behind the recovery, there are two very important reasons that, we can, figure out. First is there's been good Kharif crop, and, the Kharif realization to farmers is something that's, helping revival of rural demand. So if we talk about the MSPs, which have been declared by government and which have, been started factoring in, we've seen the prices, of agri products moving up. And, as a result of that, the realization to farmers is better. So the Kharif realization to farmers has been better. And rural primarily being dependent on agricultural income, they are getting benefited most out of it. So that's one of the important reasons why we are seeing rural demand recovery. The second reason that we have seen in in terms of recovery is primarily because of extension of schemes by government like Pradhan Mantri Gramin Kalyan Yojana. So they have continued giving grains free. So the disposable income of many consumers in the rural continues to remain high, because they don't have to spend money on grains which they get otherwise from the government. So these two are the factors which are helping revival of rural demand. And with a robust demand coming from urban, we're pretty hopeful that the next 2 quarters would see a good revival in total demand, urban plus rural.
Mayank, thank you for joining in and giving us that insight, because up until now everyone was saying that post-festive season there was a bit of a slump, etc. So to that extent, it is heartening to know that over at least the last 1 month we've seen some green shoots of recovery, and with the things that you're talking about, easing of commodity inflation, higher crop realizations, the government's interventions, etc., and the upcoming budget as well. Hope is that rural demand will recover. But let's talk about your business specifically and the industry. At what rate did the industry grow in the third quarter? If you could break that up into rural and urban, how was the volume growth? How was the price growth? And parlay, did it grow faster than the industry?
Yeah, so we've been growing at about 7 to 8%. And if we talk about the total industry has grown by about 4 to 5%. If we talk in terms of breakup, I'm talking about volume growth. I'm not talking about value growth. Value growth is higher. Value growth happens to be higher because of the price hikes which have been taken in last 1 year. So if I'm comparing the growth rates compared to the similar period last year, CPLY, then growth rates are higher. Value growth rates are almost to the tune of about 8 to 10% for the industry, and we've grown by almost about 11-12%. So that's the kind of value growth rate. However, as I shared, if we talk about volume growth rate has been 4 to 5% for the industry, and we've grown by about 6 to 7%.
Okay. Sure, go ahead, sir.
Yeah, sorry. So, if we talk about urban and rural, urban has been growing. If we are talking about last, quarter, urban has been growing at a little higher pace. We've seen urban growth rates of almost about, if I'm talking about volume growth rate, we have seen at least about, 7 to 8%, whereas rural has been about 2 to 3%. However, as I shared just now, in last 1.5 months, we've seen, rural reviving. So, if we talk about the recent growth rate in rural, we are seeing, if we are specifically talking about the December month, then, we have seen almost about 4 to 5% growth in December for that particular month coming in from rural.
Okay, that's interesting that you are quite positive with regards to, the rural volume as well as value growth going forward. Just linked to all of this, then you've managed to take price hikes in the past 1 year, which you did quantify in terms of the value growth that you've seen. Is there a need to take further price hikes based on the cost inflation scenario? If so, how much? And can you then give us a sense in terms of where you expect possibly margins and EBITDA to probably be maintained?
We do not expect any price hikes, going forward. The outlook, would primarily be, our expectation for the price outlook is that the prices of commodities would remain stable. In fact, if we talk about, major raw material commodities like edible oil, sugar, and wheat, oil has corrected significantly. So probably from the peaks of about, almost 160, 170 rupees per kg. If we talk about edible oil, it's somewhere around about 94, 95 rupees today per kg.
Next standpoint, Mayank, just wanted to understand from an index standpoint, how has your raw material basket fared versus the same quarter last year and versus the second quarter?
Versus second and third quarter, it's more or less the same. There is a minor, dip in raw material. If we talk about, raw material cost, if we are talking about the index, then there's a minor correction about just 1 or 2%, not more than that. And the primary reason why, as I just shared, I mean, despite edible oil correcting significantly, If we talk about the other two major raw material, which is wheat and sugar, they have gone up, significantly. We've seen almost about 20-25% increase in wheat and almost about 15% to 20% increase in prices of sugar compared to last year. So if we talk about the weighted average, the contribution of wheat and sugar happens to be higher than that of edible oil in terms of volume to volume contribution. And as a result of that, if we talk about the overall impact on cost, it has gone down marginally. It has not gone down significantly, which it should have, given the way edible oil has corrected. However, as I shared, since wheat, which happens to be the significant input, followed by sugar, since they have gone up, they have negated the impact of correction of edible oil.
Okay, all right. So we're going to leave it on that note. Thank you very much for joining in and speaking with us. So that's an interesting take, in fact, which is coming from Parley, considering that we did hear from the likes of Marico, Godrej Consumer, that yes, rural demand has been a bit sluggish. Those are the trends that they've seen. Urban has been better, but Parley seems to be quite confident in terms of rural picking up going into 2023. Take a short break, but up next, Reema will join in to analyze the expectations from the IT sector in our special segment, Quarter Se Quarter Tak. Stay tuned. Welcome back. Well, it is earnings season. Q3 earnings season is here, and it starts with TCS on the 9th, which is on Monday, and Infosys and HCL Tech on the 12th, and Wipro on the 13th of Jan. The big question then is the slowdown easing or worsening, and is a slowdown priced in after the 30% underperformance last year? Reema standing by with at the big wall with the key expectations from the IT space this quarter. Reema.
Thanks so much for that. So let's tell our viewers what we can learn and hope to learn in this quarter's results and commentary. Now remember, Q3 is typically a soft quarter seasonally. But this quarter, growth rates will further moderate given the higher furloughs. Remember, HCL Tech has already highlighted that we are seeing higher furloughs in 3 key verticals. They spoke about high-tech, BFSI and telecom. Now let's pull up the CNBC TV 18 estimates on the growth expectations this time. The top 5 IT companies are anticipated to report a growth anywhere between 0.5% going up to 3.5% for HCL Tech. But if you compare with this December of last year, where the growth rates averaged from 2.5% going up to 6.5%, you would see that growth is slowing down. That's point number 1. So what do we want to hear from the management to understand the future demand? 1, will the furloughs continue into Q4 as well? 2, how are the tech budgets for this calendar year? If the tech budgets are flat, and if they're not growing, and if large deals are absent, can IT companies see double-digit growth next year? Number 3, is there a moderation in the deal win outlook? And what about pricing? Is pricing under pressure? And finally, watch for the hiring numbers because they are a proxy for future demand. Now let's talk about the margins and the expectation. Now the CNBC TV 18 poll throws up that margins are likely to expand for the second consecutive quarter for the IT companies. This is aided by an INR depreciation and 2, declining attrition. So TCS's margins are likely to expand by 70 basis points. For Infosys, margins are likely to go up by 30 to 40 basis points. Now, while margins are improving, a point which has been made by the IT bears is that margins are still significantly off compared to the peak levels that they hit post-COVID. Remember, in the immediate aftermath of COVID, IT companies had cut back on hiring, salary, travel costs were zero, and margins had surged. Now, the question is there scope to improve the margins from current level, given that attrition is on a declining trend? Or will growth offset any margin improvement because you need operating leverage to kick in to improve margin? Now let's talk about the guidance. The annual guidance is given by Infosys and HCL Tech. Infosys is likely to retain its FY23 guidance on revenues and margins, and so is HCL Tech. HCL Tech, in fact, just last month had already tweaked its guidance, right? They had indicated that growth rates this year will be at the lower end of their guided band. So don't expect any change. Wipro gives you a quarterly guidance, and next quarter's guidance is likely to be muted at 0 to 2%. But as we've been saying, the question is really on future demand, FY24 and FY25. And here, unfortunately, the results are unlikely to give you any strong quantitative signal on FY24 outlook. And then let's move on to the stock price and valuations. Now, last year, the Nifty IT underperformed. The Nifty IT index was down 25% versus the Nifty, which was up 5%. Now, the Nifty IT has underperformed the markets consecutively only once in the past 15 years. So will this support a trend reversal? Can Nifty IT recover, or given the fact that despite the correction, valuations are still at a premium to historical levels, will we see valuations correct back to their pre-COVID levels, driving a weakness in the stock? Back to you.
Reema, thank you so much for joining us. So that's what you can expect from the IT sector this time around, and it's time for a break on that note. On the other side, Manisha Gupta will join in with Raj Manohar Somsundaram of Aqua Connect. Stay tuned.
Welcome back. Joining us on the show now is Raj Somsundaram. He's CEO and founder at Aqua Connect. Raj, hi, welcome to the show. You know, we were discussing not too long back ago on how many of the startups in 2022 did not end up make money. But the way your model has been a phygital, and you are spread out in 6 states, and aquaculture is what you do. Tell us what went right for you in last 1 year. You especially got another round of funding as well.
Thank you very much for having me here, Manisha. Despite the funding winters, we managed to attract fresh capital. That's about 15 million from both domestic venture capitalists as well as foreign venture capitalists. Thanks to our sustainable business model, as well as we managed to drive a business with a positive net margin, and then we have got sustainable unit economics as well. So that's what probably worked well for us in raising new capital. So as you know, we are a full stack aquaculture technology providers, and wherein we are offering technology solutions as well as market linkage solutions to the multiple stakeholder in this value chain, be it a farmer, be it a retailer who provides inputs to the farmer, or someone who is buying seafood from the farmers. And finally, nowadays, we had managed to bring formal capital to the aquaculture value chain through the financial providers.
Raj, help us with what is the overall total market in India when you talk about aquaculture? What is the kind of growth that we're looking at? And when you do talk about tech penetration, how much is that?
Sure. So we're talking about a $25 billion of market opportunity in aquaculture in India. So largely the shrimp, gets the limelight because of the, export oriented business. But there is a huge opportunity in the fish aquaculture business as well. So we are, these statistics would help us understand the business better. So India is the second largest aquaculture producers in the world. And we are one of the largest exporter of frozen shrimp to the world. By just exporting seafood, we are earning close to $7 billion worth of foreign exchange every year. And this sector is considered to be a sunrise sector, as it is growing, 10% CAGR every year. So, and rightly said, the government is also, placing much of importance to this sector so that they will be able to improve the farmers' income.
Clearly. The other thing that as every sector is looking at is sustainability. When it comes to aquaculture, how is that?
Sure. Of course, in India, there is a very limited penetration of technology that impacts negatively about the farm production efficiency, as well as the market linkages. So as we move forward, I see we need to be having more thrust on the technology adoption. So the biggest pain point in technology adoption in India is twofold. One is the right kind of awareness needs to be created, as well as we need to come up with the right business model so that we'll be able to fund the technology adoption as well. So this is kind of that's when we need startups as well as the policies that need to support this kind of a transformation in Indian aquaculture sector.
Clearly.
As well as we need to be also move from the export focused business to we need to be also focusing on the domestic market penetration.
Absolutely.
So with the domestic market penetration, we would be able to command the right price for the commodity of the seafood, because it would be less susceptible to the international fluctuations of seafood.
Raj, I want to squeeze
So
in one final question, and this is about Budget 2023. I mean, you know, with less than 1 month to go and all the factors that you pointed out to us, what are the 2 listings that you would want to put out to the Finance Minister?
Right. So there are 2 things that I already talked about. The one is, improving the production efficiency at the farms by improving the technology adoption. So somewhere we need support from the government on, raising awareness of technology adoption in the farms. And the second thing is there a way we could incentivize the technology adoption at the farm level? And that's the first one. The second one is improving the domestic market consumption by, creating some new, campaigns like we had created increasing the egg consumption in the poultry sector.
Yes.
The same way we need to be also, talking about how do we improve the domestic consumption of seafood in India. So it will eventually help farmers to, improve their revenues through the aquaculture activities.
Okay, all right. Thanks, Manisha, for taking us through that conversation. Well, more updates flowing in. Dabur is flashing on your screen. India business expected to report low to mid-single-digit revenue growth. So a bit of a subdued outlook which is coming in there. But we'll put the entire update into context for you. The healthcare portfolio returned to positive growth trajectory. A couple of more statements coming in. We'll do one thing. We'll wrap up on the show. But Business Lunch will take this and all the other stories forward. Stay tuned.